Miningscout befindet sich auf der Minenmesse PDAC in Toronto 2014 und immer auf der Suche nach interessanten Gesprächspartnern. Auf der Minenmesse werden auch Redner zu bestimmten Themen aufgerufen, und wann immer eine Halle voll wird und das Thema Gold angesprochen wird, dann betritt ein Mann die Bühne. Das ist Garrett Goggin, ein weltweit anerkannter Spezialist auf diesem Sektor, der zu diesem Thema wahrlich viel zu sagen hat. Umso mehr freut es mich, dass er heute bei uns ist und uns ein paar seiner Gedanken mitteilen darf. Welcome, Garrett. Thank you for taking time for a little interview. And I have introduced you as an absolute specialist in the gold sector and in the gold market, and you are filling a lot of rooms when you are speaking. So, what are your thoughts about the growing power of the Eastern gold exchanges?
Okay.
Will it have an impact on to the Western Hemisphere?
Okay. Excellent. Thank you for the question, and thank you for having me, Erwin, and nice to meet you. Regarding the question of Eastern demand, especially Chinese demand, yes, it's significant right here. The world gold production is about 2,500 tons year to date.
Yeah.
A lot of people don't know that China is #1 in terms of gold production. They produce more gold than any other country in the world. They produce about 500 to 600 tons. Now, one of the things that's happening here is that there's been a lot of import of gold into China. Now, you can track this because it's been leaving the GLD ETF, which is all vaulted in the UK. So from import-export figures, you can see that 1,000 tons left the GLD ETF. It went from out of the vaults in the UK, it got imported into Switzerland. It goes into Switzerland because that's where they refine all the metal. So it gets refined from the 999 basis to the quadruple 9 basis, which what they use in Asia. So 1,000 tons imported into Switzerland, 1,000 tons right into Hong Kong, and all the gold from most of the gold from China that is imported goes through Hong Kong. So 1,000 tons of gold was imported into China from Hong Kong. Yeah. So, and then if you look at the Shanghai Gold Exchange, the difference between that futures exchange and the US, the COMEX, is that the majority of investors in the Shanghai Gold Exchange, they take delivery on their contracts. Like 75% of the contracts are taken delivery upon, whereas in the US, it's basically a paper market. Probably less than 2% of all contracts is taken physical is taken for delivery. In China, 75% in Shanghai, and that's a staggering amount of demand. Some analysis that you can search for and find it could be up to 2,500 tons in 2013. So yeah, if there's only 2,500 tons of gold being mined in the world, China's mining 500 tons of it, and they're importing another 2,500 tons. The demand is overwhelming the supply.
Oh, it's interesting. So I have heard the Indian government plans to reduce their tax, the import tax of gold. Expect you another boom of Indian people buying gold?
Yeah, India is an interesting market because a lot of people in India, they don't necessarily have bank accounts. So, you know, instead of saving your money in an account, you will buy gold. You will buy another ring. You'll make your necklace bigger. You wear it around your neck. So yeah, the export restrictions have reduced demand slightly, and if they take that back, the gold demand should pick up. But you know, they're still smuggling a tremendous amount of gold into India. You know, all the flights where people are carrying gold bars coming from Dubai going back to India. You hear anecdotal story regarding that, but yeah, India is a major driver of gold demand also.
Yeah. You are also running as a co-editor,
yes.
The medium gold stock analysts.
Yes.
What's your approach of this?
Sure. So we're fundamental we're fundamental analysts. We cover 65 different gold miners and royalty companies, as well as 25 different silver companies. We do the research every single month, and then we basically do the qualitative research along with the quantitative research in order to pick our top 10 most favorite miners. Now, since we're fundamental investors, we don't trade a lot. We had a couple buys and sells last year, and basically none this year. It takes a longer time for companies to realize their potential. We have an extremely good track record. We've returned close to 30% a year since the bull market began in 2001. This is better than gold. This is better than the gold indices. We believe that the GSA Top 10 is the best way to play the gold bull market. And the difference between us and a lot of the other guys out there, our performance is audited by a CFA, GIPS compliance, CPA firm. The same stuff that mutual funds do and hedge funds do. Every single buy, every single sell, every single transaction we've done for the past 13 years.
So your success is sealed.
It's sealed.
Yes.
It's right there, yeah.
That's fine to hear. You are also running a guideline for investors. That's interesting because our portal is also trying to educate the people in the audience. What are your criteria? What are your aspects in this guideline?
Sure. We follow along that method also as far as education. The editor of the Gold Stock Analyst is John Duty. John Duty's been writing this for 20 years. Prior to that, he was a professor of economics at Bentley University outside Boston, Massachusetts for over 10 years. So he's a big believer in education. Basically, the way that we're able to educate our investors, all the data, it's very transparent. All the data is basically on the data pages. So we've got vast amounts of data that we accumulate, and then as analysts, we distill it down and boil it down and analyze it in order to come out with our favorite top 10 picks.
Garrett, please give us some moments about what do you think about the gold values, the stock markets at the moment?
Right now in the gold market, we feel as if the miners are reflecting a very strong value proposition here. The mine industry has been focusing on cash costs for a long time. They had large margins with cash costs. However, in cash costs, they weren't including sustaining capex. So all the CEOs of the miners were fired over the last, major firms were fired over the last 3 years because they were unprofitable on a free cash flow metric. A large company like Barrick Gold is more profitable on a free cash flow metric in 2014 than they were in 2012. They're doing 1 million ounces less in production versus 2012. The gold price is $400 lower versus 2012, and they're generating more free cash flow in 2014 than they were in 2012. And the share price is 50% what it was in 2012. So in a value proposition, these miners are reflecting tremendous value right here. Now I'm using Barrick as an example for the mining industry because they're the largest producer, but we're not necessarily recommending Barrick. We're just using that as an example to show how profitable and how much free cash flow these miners are starting to generate at these levels. And the second thing, internally we've looked at some interesting analogs between 1975 and 1976 when the gold market corrected 50%, gold stocks corrected 69% over a period of 2 years and 2 months. This most recent gold stock correction went down 68%, and it took, again, 2 years and 2 months. So it matches identically in terms of duration and amplitude with 1976. And we all know what happened in 1976, where the gold price bottomed and it moved up to 800, and gold stocks went from 200 to 1200 on one of the indices. So, the economic backdrop was very similar to the 70s with a stagnant economy, with the Fed supportive, keeping interest rates low, and we're pretty optimistic about the next few years.
That's nice to hear. Thank you, because many are awaiting positive signs for a growing gold price and a healthy structure of the mining companies. Now the first steps are done. Cost shrinking programs, cost saving programs. They make a clear word about their real costs, not only cash costs. It was a necessary step to do this, to get back the confidence of the investors, in my opinion.
Absolutely.
And I hope you can agree.
Yep.
And so with this new fundament, the companies would be able to grow in the next month with
right.
a growing gold price, and this will come.
Yes.
Yes?
Exactly.
Thank you very much.
Okay.
Thank you very much.
Awesome. Thank you, Ron.